morning, everyone. This is Ryan with your Wednesday, June 5th morning market commentary. Once again, we'll start off with the corn seeing a little setback, a small one yesterday and a little bit larger one here overnight. What we saw yesterday was for the first time in 3 weeks, there really wasn't any sign of any fun buying in the corn. That isn't directly bearish to corn, but taking away your largest buyer did lose some of the overnight excitement from the previous session. And we did see the corn finish just barely higher yesterday. It looks like overnight trade is anticipating that funds won't be back again today, so you could see a little bit more of a technical setback. And to put things into perspective, we should talk about what a technical setback is for corn. 38% retracement on the July corn is 401 3/4, and the first chart gap downside is 404 3/4. So while we see overnight down what appears to be a hefty amount, if you put that into perspective, that once again a 38% retracement is still considered just a small technical setback. Let's keep in mind that that number is 401 3/4. Also weighing on corn is likely the fact that wheat between yesterday and last night is down 26 cents, so likely seeing a little bit of spillover weight from the wheat as well. Let's move over to the beans, and with the beans, let's draw in the weather conversation again. Let's look at this map here to start off that shows the rain that has fallen over the last 3 days. Obviously not completely dry, but if we look at this map, we see some very important areas that needed to see dryness has seen a break in the rain in the last 3 days. And those areas, most importantly, would be South Dakota, Indiana, and Ohio. So these areas are the areas that needed to see it the most, and maybe as we flip over to the 1 to 5 day forecast looking forward, we see those same areas continue to be slightly dry. So maybe we can make some decent progress there, even going back to a corn discussion, talking about those 3 states that are most behind in corn planting, maybe actually get more acres out there than people may have thought just a couple days ago. So that 1 to 5 day map again, not drastically dry, but a definitely improved map from what we've seen recently. And now turning over to the 6 to 10 day outlook, we see about the same thing. You'll say, obviously, not completely dry, but if you're going to compare this map compared to what we saw just yesterday, it is a decent reduction in rainfall. So any planting progress that can move ahead here over the next 2 weeks, likely to cause at least light pressure. We obviously have some issues we're not going to fix from dry weather going forward, but it could ease back some of the extreme expectations of 10 million plus lost corn acreage that was being discussed just yesterday. And of course, ease back on some of the lost bean acre discussion that was just getting started. We also see that along with the corn, funds eased back, and they really weren't present in the beans yesterday either, like we saw in corn. But we should mention that funds were never exactly strong buyers of beans. So seeing them ease back in beans, we should see beans ease back less than corn and wheat. Moving over to the wheat, trade expected a 2% drop in good to excellent Monday afternoon. Instead, that was a 3% increase. We saw a sizable setback in wheat yesterday, and that comes from that 5% difference from what trade expected to what they actually saw. So that 1 day setback could actually last more than 1 day. We could see 2 or 3 days here, because that was a pretty drastic change in expectations versus what we got from the USDA. Just last week, we were talking about some incredible damage in the crop and potential quality issues, and seeing that good to excellent rating bounce back has really quieted some of that discussion in just this week. Also putting a wheat setback into perspective, the 38% retracement on July Chicago wheat is 486 3/4. Moving over to cattle, we saw the funds very active sellers Thursday and Friday last week. So, of course, on Monday, cattle's trade on Monday, they stayed cautious the entire day, wondering if you'd see that same fund selling on the close like we saw on Thursday and Friday. When it wasn't seen, and you had to wait all the way to the close Monday, that allowed yesterday's trade, to finally see a needed technical bounce. So traders waited to make sure funds were going to be on the sidelines. Once it was seen that they were, we saw an active technical bounce, which was needed because we were short-term oversold. And we'll see how much more of that technical bounce we can see today and through the rest of the week. Now, we already do have a 113 cash trade from Monday. So obviously this technical bounce, we could see a little bit more of it, but a 113 starting trade early in the week will probably limit that technical bounce at least a small amount. So let's see how much more we can get here over the next couple days. We're likely to see just more 113 trades through the rest of the week. So on the cash side, probably not going to see too much additional news. So it'll be technical bounce versus the cash trade we already have, weighing on both sides of that market here this week. If you have any questions, give us a call, 800-551-4626, or visit us on the web, allendale-inc.com.